Funny, your mic sounds fine. All right, everybody. My name is Fausto Puglisi, president, founder.
Good.
Give me 1 second, Tom. Let me just do a quick intro. All right, everybody. Once again, I want to bring on our next guest.
Man, let's get started. I'm looking for the arrow to move the slides. Where's that at? Hey, Wayne. All right, folks. Sorry for that. Always a little technology you had to overcome. Anyway, I'm Tom Busby, and thanks for coming today. Thanks, Fausto, for putting this on. And got a big crowd in here, and hope everybody is having a good Saturday and learning a lot. I've been involved in this for quite a while, 1996, and I know that a lot of you out there are trying to improve your game, and hopefully I can give you some insights today that might help you do that. DTI is our company in Mobile, Alabama, and we have been in business since 1996, and so I think that we've been through a lot of markets over the years, and one of the things I keep telling everybody is that you just have to persevere. Okay. Fausto, how do you move the slide? I don't see the arrow. I see an arrow up there in the left-hand corner, but that's the pointer. Oh, arrows on the keyboard. Okay, perfect. All right, let me talk a little bit about risk before I get started. I've been teaching and trading for a lot of years, and you're going to hear me talk about $300. What I try to do with any setup that I do, and you can do the math on this, but if I'm trading futures, I try to use a $300 risk. And then, of course, the reward has to take care of itself. But the $300 risk is the maximum risk I'll do any trade with. And that applies to futures. That applies to stock. So if I got a $50 stock, what price would my stock be at if I was using 100 shares at $50? And if I was trading an option, say at $4, where would my stop be on an option at $4? Option would be at $1, and the stock would be at 47. Okay. Now, if you're trading an S&P E-mini, how many points would it be? If you're doing an S&P E-mini, if you limited the risk to $300, how many points on the E-mini? There you go. All right. Okay, today's presentation and what I'm going to cover is overcoming fear in trading. That $300 I talked about is a way that works. 3 major insights to help you trade next quarter. We're starting the next quarter on Tuesday, and then planning for the week. We'll talk about that at the end of the presentation. Here's our office down in Mobile. It's located in West Mobile, and we built this in 2001. This is where we teach people about trading. This futures, options, and stocks. It's about swing trading, short-term trading, and it's also about long-term trading. And at the end of this presentation, I'll talk a little bit about how we do that and then the plan that goes into making it happen. All right, DTI, like I said, we started the company in 1996. Been doing it for quite a while. I met Fausto many years ago, and we've been friends ever since. A great educator, great trader, and I feel that we've had a mutually beneficial relationship over the years. We've done a lot. We've traded together. We've done webinars, seminars all over really the country and in Canada. A little bit about my background. I've been trading and investing since the early 1980s. I'm a member of the world's largest exchange, Chicago Mercantile Exchange, and I've been trading the S&P since April of 1982. Very first day they started trading the S&P, I traded it and been educated, started the company in 1996. So been around a while, seen a lot, and I do know how to teach you how to make money if you can listen. So let's if you will, get a pencil and sheet of paper out because I'm going to give you a little insight here that I want you to think about in the background of what I talk about today. If you look at April as a month, April is a trading month. Historically, for the last 50 years, April has proven to be the best performing month out of the 12 months for the Dow Jones. So if you know that and the market looks fairly decent when you start off the quarter and you start off April, then the odds are you're probably going to see some higher prices. And so if you see higher prices, you can benefit from that by buying the right stock, buying the right options or selling the right puts, or buying the right futures contracts. So that's something to keep in the background as I go through today's presentation. Now, here's my books. We call it the Trilogy. The first one, Winning the Day Trading Game. It's sort of how I got started, some of the trials and tribulations, some of the heartbreak that I suffered, you know, not knowing what I was doing and getting into the marketplace, losing money and all the things that you want to avoid. People tell me this book gives you a pathway to become a professional trader. It's in, I think, 11 different languages. It's a pretty popular book, and it's you can find it, I think, on Amazon if you're interested. Markets Never Sleep talks about the global market. I wrote this book because years ago, when the exchange was trying to get into electronic trading, they had a system they called Globex. The Globex system, what they did, they picked 50 traders worldwide to get one of these Globex terminals, and we were early pioneers in this trading. And I got one of those terminals in Mobile, Alabama, and I'll never forget having a Globex terminal and being able to trade 24 hours when most people couldn't even think about trading, you know, during the wee hours of the morning. The last book, Trade to Win, we hooked up with a lot of brokerage firms in '07, and one of the things that I found out with brokerage firms is that a lot of them won't teach you how to do it. They'll teach you how to do a lot of things, but they won't teach you how to do your setups and stuff. Some of my books are Think and Grow, or some of the books I really like are Think and Grow Rich. This is one of my favorite books, How to Trade in Stocks, Chapter 6. And then, of course, the Stock Trader's Almanac, which is a staple that I keep by my desk as I'm looking at. Matter of fact, I'm looking at today, and I'm looking at come Monday, the percentage of the Dow being up Monday is about 38% over the last 21 years. If you go to Tuesday, the first day of April, it jumps to 81%. So this sort of backs up what I was saying about April kicking it up. And then, of course, a lot of people have problems taking losses or even taking gains, and I find this book real good, Irrefutable Truths of Trading, by a friend of mine named John Hayden. Overcoming fear in trading. Everybody's got it. I have it, especially when you're trading publicly. Think about that. You put a trade on publicly and everybody sees it and you go, oh, I hope it wins. Acronym for fear. False evidence appearing real. And this is what I think about when I'm doing a trade. I always go back to the numbers that got me into the trade, I think and focus on the numbers, not on whether I'm winning or losing, but what the numbers are telling me. Whether I'm above support, whether the market's indicators are looking good, and I always keep focused on that during a trade. Overcoming fear. You'll always hear me say, let's figure out a way to do it. Let's find a way to do something rather than can't. Fearful thoughts are designed to keep you safe and limited. You got to get out there sometimes to get on the playing field. Vince Lombardi once said he'd never seen anybody win a football game unless they couldn't feel, and that's pretty, pretty analogous to trading the market. You got to get in the game, and you always think of the worst. Something negative is going to happen. Well, you think of that before you get into the trade, plan for it, accept it, then you take the trade and be positive as you do it. If you recognize this before you ever take a trade, you will find out that you'll do a lot better. For example, recognizing the presence of fear allows you to make conscious decisions. You know that you're not going to win every trade. I've never met anybody in my 33 years that could win every trade. I met some people that got pretty high at times, but everybody will take losses, and it's how you manage your losses. Think of a baseball team. If you look at the world champion Boston Red Sox, their batting order was very strong in the 5th, 6th, and 7th, and 8th slot, where other teams might not have had that same array of hitters coming up. Every one of their hitters could do damage to you. You have to think about that when you're trading in the market. Always take that worst case scenario. In our case, I told you the $300 is what we use. So if I took an S&P position, the worst loss I'm going to take on that S&P after entry is 6 points. Now, I want you to think about that. If you take a loss of 6 points, how many points would you have to make to break even after 10 trades on the 5, if your accuracy rate was 50%? If you flipped a coin and you said, hey, I'm going to win 5 and lose 5. And this is a hard part for a lot of traders because they'll hurry up and take a profit and they'll forget about their risk-reward setup. I find it very interesting when people are trading, when they scalp trades and do stuff like that. I always say to myself, well, that's great, but what about the one that goes against you? Typically, they'll fold like a cheap suit, and it's a story from the market. You heard it. Hey, I made money for 50 trades, and then I lost one big loss, took all my wins and turned it into losses because I didn't take the proper action. That's what I love about the $300 approach. You clearly see the benefit of that over a week of trading, over a month of trading, over a year of trading. When you go back and review your trades and say, hey, I was wrong on that scenario, but I got burned $300. This is probably, if I could tell anything else to anybody else today, try it. It works. To be outstanding, you have to accept risk. So when I take trades, I think, okay, I'm gonna buy in with a $300 worst case scenario, and I'm gonna try to make either a 1-to-1 or a 2-to-1 or a 3-to-1. I'll tell you about a little trade I did on Friday. It was the afternoon on Friday. Does anybody follow Google? Google was trading, if I remember, about 11:26, about 11:27. It was about 1 o'clock. And I looked at it and I said to people, hey folks, this is one that's got to work in the next 2 hours. The risk on this particular option is $1.50. If you buy it here and it breaks 226, which is a key number from, or 1126, which was a key number for me, then we'll be able to make a 2-to-1 or 3-to-1 off this trade. Sure enough, we got into the trade. We paid $1.50 for it. And about 30 minutes later, Google fell. It dropped from 1126 down to 1119, and we were able to accept that risk and make an outstanding trade. And that's because we knew that the worst case, we might blow $300 on the trade. So 2 contracts would have been $300 at $1.50. There's steps to success, though. You got to have a good plan. And in these steps, I do it the same way every week. Here's the way my week goes. I'll give you the overview. On Sunday night, I have a planning session at 8 o'clock every Sunday night. This is a public planning session. I go through and I look at the 3 best trade opportunities that will be out there for next week. When I do that, I look at the time and I look at the price and I look at when I'm going to enter those trades. I look at economic news, I look at probabilities for each day, and I have that plan in my head before Monday starts. And it has been a real lifesaver for people as they go through the week. Last week pretty much followed the plan as we described it the previous week. And some weeks, some weeks don't, but at least you make adjustments when you notice it's not following the plan. But having a good plan is the first stop on your step to success. Now, turn negative emotions into positive experience. I always tell people, if you're hanging around a bunch of people that are negative and they're your friends, change friends. You want to be around positive people, especially when it comes to trading. It works this way. About 100% of the time, if you're negative, you're going to lose money. And there's some days you might wake up on the wrong side of the bed. I would say don't trade. What you do is you sort of learn to understand yourself. That's a beautiful thing about trading. You really will find out who you really are when you put real money on the line. What I do a lot, but one of the things that I always try to do is I have a scenario that's going to play out inside my plan. For example, I gave you a scenario today when I started off. I said April is going to be very bullish. Here's what I would expect to see. On Monday evening when the S&P opens, I would expect to see the S&P trading above its opening price. If it's doing that, it's following my scenario, and that's what I'll be looking for as I get up the next morning and start trading. My expectations, I try to keep those in tow. There's nobody I've ever met that would get, they just go crazy. I mean, they make a little bit of money, then they put more on the line, they put more on the line, they leave their risk reward behind, and they take their plan, they throw it away, and the next thing you know, they got big trades on that turn bad on them, and they lose a bunch of money. So you got to control yourself, control your expectation, control what you expect to do with the money you're going to put at risk. And you do all this before the market starts. Don't try to do this. Don't try to do this once the market starts. It will hypnotize you and get you thinking one thing or doing something else. Has that ever happened to you? You're looking at the market, you have a good analysis, maybe have a stock you want to buy, it has a little down tick, and the next thing you do, what happens? You bail out of the stock. Within 30 minutes later, the stock's making highs, and you're sitting there kicking yourself because you didn't control your expectations. My approach is simple. It's straightforward. I believe in simple. I don't believe that you can complicate the world of trading. You gotta break it down to a simple question. Is the market going up? Is the market going down? Or should you stay out? You ought to write that one down, folks. That's a good way to start every trade out. Is the market going up? Is it going down? Or should you stay out? And then you look for support on what you think. If you got support on what you think, then you move on to the next step. If the market shows the S&P higher on the month, on the week, on the day, then I'm long. I focus on that throughout the thought process. Now let's talk about that. Where did the S&P open the year? Anybody know where the S&P opened the year? I'll take a sip of tea while you're thinking about that one. Right. So, if you think about it, 75% of all stocks in the S&P 500 track the S&P 500. So if we go in Tuesday and the S&P is higher than 1845, then I'm looking I am looking for higher prices. And then, of course, you bring the month into play. We'll get a monthly open Monday night. We'll get a weekly open on Sunday night. We're a little bit, the week will be ahead of the month this time. Then you get a daily open, which will be the same as the monthly open on Tuesday. And then if it's up, then I'll figure out if I'm going to be long. Now, as a global trader, I also found there were 4 other time frames you had to be that you had to know. The first is Asia. Asia, and you might write these times down, goes from 5 p.m., this is Central Time, to 3:30 a.m. 5 p.m. to 3:30 a.m. I'll just give these numbers to you and times to you because they work. Then from 3:30 to 8:30, you have Europe. And then from 3:30 to 8:30 with Europe, you have 4 major markets you focus on. The DAX, the FTSE, the Swiss, and the CAC. Now, I'm a DAX trader. I probably put more focus on it than any of those 4. But you watch those markets on Monday morning. If they're moving higher and they're above their openings, chances are you're going to have a New York opening that's going to be higher. You just got to follow it and see it yourself. These numbers, you don't look at it as positive or negative. You look at it, how do they relate to the opening that you're trading? If you're trading a longer-term trade, you want to be above the monthly open. If you're trading a swing trade, you want to be above the weekly open. If you're doing a day trade, you want to be above the daily open. That's a big picture view at it. Be open to understanding this is how it works. Always focus on the present. Let me give you an example, okay? You're in a moment now, okay? You can't bring that baggage with you from prior trades. You can't think about, the dream trade. You got to be in that trade, you got to manage that trade, and you got to let it work for you. Here's a stock for you, Hershey. Who's ever traded Hershey before? Matter of fact, I just heard CNBC had a thing on Milton Hershey, how he built his company. And one of the things they said that one of the traits that Milton Hershey had that built Hershey Company was perseverance. I will tell you that Hershey is a great stock. I will tell you I'm long Hershey. I will tell you come Tuesday, I will add to my position. I will tell you that. Okay. Did I hit 3? Okay, let's go 3 major insights to help you next quarter. The first, April is very bullish. I just read you the probability for Monday being up versus Monday being down. The probability for Tuesday being up versus Monday being down. Monday has a probability 38% of the time last 21 years. It's been a very weak day. Tuesday, on the other hand, 81% has been positive. So if you got the right setup, come Tuesday, Wall Street's saying, take my money. History shows it will outperform May and June. Now, how will you know it's outperforming May and June? Well, what you want to do is you have to believe if April starts out very bullish and goes up, that it's going to be a lot better percentage-wise once we get to May and June. Let's talk about that. You've heard this saying, sell in May and go away. I know you've heard it. I've heard it my whole career. Sell in May and go away. Now, last year, it didn't happen that way, did it? But if you look at the last 21 years, it's been a pretty good little thing to remember. Sell in May and go away. And one of the things that we're doing at DTI tomorrow night, I've got 5 stocks that I'm going to put on in the month of April. And the idea is to hold those stocks for about 60 days with a targeted price gain of about 35%. And I'm going to go through that step by step over the next 60 days to make it happen. Now, if the market takes off, rises, say 5% in April, rises another 3% in May, then you got to start thinking it's time for a correction. That will happen in June. Usually the corrections are about 50%. Now, if you take the first 2 months and you do get those kind of runs, then that's probably what I would look for. Now, here's how you know that's not going to happen. If you have an April high and a May high that's exceeded in June, then you know it's not a retracement in June, it's a breakaway in June, and that's the way you use that. And if you'll hold your questions, Juan, I'll come back to it at the end of the presentation. I'll be glad to answer them. Let me give you some additional insights I put together for you today. Okay, worry about risk first. Write this one down. $300 per contract or $300 on 100 shares of stock. No matter what the price of the stock is, don't do the trade unless you can do it for less than $300. That's part of your whole risk-reward setup. We all know there's a high degree of risk involved in trading. We all know past performance is not indicative of future returns, but we know that we can improve those future returns by following this one simple rule: limit your losses. And this is how you do it. Now, a lot of people don't even know this, but the market actually opens Sunday night at 5 o'clock. I used to tell people this, and go, it opens on Sunday night, because I used to ask the question, when does the market open? And everybody from New York would tell me, well, it opens at 9:30. And I'd say, no, 8:30 Central Time. It actually opens at 5 o'clock Central Time on Sunday night. It opens a couple hours before Asia kicks off and gives you an opportunity to see what happened over the weekend and all the news being digested there in that S&P 500. All right, somebody asked me, where's the best place to start from? The first trading day of the year, January the 2nd. This will help you decide as you go through the year who's winning and who's losing. Tesla. Anybody got Tesla? Anybody own Tesla, traded Tesla? Let me show you how this works in real life. Anybody have Tesla? Anybody know where Tesla opened the year? Where did Tesla open the year, Tony? Well, it's up 64% off its yearly open right now. Tesla is. Just by knowing on the first day of the year, you would have recognized that, wouldn't you? Now, here's one I like to use, and I got a story behind this, and I'll tell you the story, okay? When a stock crosses 100, it will typically go to 110. In fact, that Hershey I was talking about is in the process of headed to 110. Currently, it's about 103. Actually, I think it's going to go to about 120 based on my information that I use, and I think it's going to happen by May. But here's a story. Years ago, many years ago, I worked at a national brokerage company, and I was shorting their stock because I said, any company run this bad, the company ought to go, you know, the stock price ought to go down. The stock was at 98. I'll never forget this. I shorted it. I had all my money in that stock. The next day, when it crossed 100, it went to 110. And I found out early on, this works. Remember it? It works. I can think of a lot of examples over the years I've used this, but in the present example is Hershey stock right now. There's an example of what Hershey stock looks like. And a pretty good uptrend, isn't it? And time to step in and get some more of it on Tuesday. All right, every Wednesday a crude oil report is released at 9:30. I don't know if you trade oil stocks. I don't know if you trade oil options. I don't know what you do, but you've got to focus on this crude report. This crude report sets the time and the price that you're going to see crude trade for about a week at a time, every Wednesday cycle. And there's trades that you can do if you look. You can go to London and look at what London oil stocks are doing to give you an insight of what U.S. oil stocks are going to do way before that 9:30. That's a pre-market trading opportunity that's there every Wednesday when it comes to crude oil. Economic reports, very important. Let's go back to a real recent one. Y'all remember that we just changed the Fed chairman, Janet Yellen. Janet Yellen. She had her first public appearance and, you know, where she was sitting there talking about the market, okay? And I remember when she came out and stumbled, and immediately I knew that the market was not going to take kindly to what she was doing. At that time, we were below the opening. The market was headed down, and it had a pretty good sell-off for Janet Yellen. Welcome to the big leagues, is what it said to her. And so she had to get her act together. And keep your eye on her anytime the Fed's reporting. Other economic news you need to care about is the first Friday of each month when they have the employment report. If you look at unemployment, it's trending lower. If you look at some of the data and the economic things, they look fairly healthy for a fairly decent year. So things are improving, even though most people don't think they are. There are some slight improvements. I guess they were so bad, anything compared to bad looks better. Markets respect news you should too. We're going to come into earnings season, the second half of the month. What major stock that everybody that's a trader trades? Apple, right? Do y'all know what date Apple's reporting its earnings on? Right around April 22nd. Apple's been relatively, compared to other stocks, moving higher, hasn't it? Have y'all noticed that? Well, get ready, because I think Apple's going to be a good stock to trade in the month of leading up to those earnings. Now, here's a way you find out if you've got a stock in your portfolio that's not doing well. What you do is you look at your portfolio, you have a real good market day, and your stock doesn't move up. That's the first sign that a stock's going to go down. 3 weeks ago, anybody trade Netflix? Netflix, we do options on Netflix, but 3 weeks ago or 2 weeks ago, I told people, I said, would you know how to make money if a stock dropped $25? That was a question I posed to our students. They said, yeah, I know how to make money if a stock drops $25. I said, would you know how to execute that? Would you know how to take advantage of it? And you'd be surprised, but a lot of people never even thought about that. But I've been watching Netflix. Netflix, relative to other stocks like Netflix, was moving down on market days. It was moving up. And so when it came time, we bought Netflix puts, and Netflix dropped from $4.25 all the way down to our target of $4.10. Actually went a little bit higher, but it was a great trade that we made because of this one insight right here. Okay, 3 things you need to know. Where are you going to enter at? And we can show you how to do that. Where are you going to get out at? That's pretty simple. You just use that $300 rule. That'll tell you where to exit on the downside when you're wrong. And then where is your target? Well, your target has to be equal to your risk, at least one by one, but I would go for 2 by 1. And I'm just going to tell you that you have a projected target anytime you get into a stock. My projected target on Hershey is 120. Never risk too much in any trade. This is what the other thing I find. I find that people start making money, and then they start stepping up the number of contracts that they're using. And then when it goes against them on that one trade, they wipe out all their profits. Try to be consistent. Try to keep an allotment of your liquid capital in the market, and always be able to trade another day. All right, the 7-11 rule. What I'm about to tell you, I've never shared outside of DTI. I'm going to share it today with you because I want to show you something that's going to help you, and it's something that you won't have all the the nitty-gritty of it, but I want you to think about it. The 7-11 rule. If you follow the S&P and you follow the NASDAQ, and it's been declining, and somebody pointed out 666 on the S&P was the low back on March the 9th. It happened between 12:30 and 1 o'clock. 12:30 and 1 o'clock, I thought the market was going to come unwound. I thought we were about to lose another 200 or 300 points, and I remembered my 7-11 rule. If the S&P's at 7.666, and it rises to 673, and the NASDAQ rises 11 points, then I have a long situation. Well, let me tell you what happened. About 1 o'clock on March the 9th, I went long, and I went long in a big way because of the 7-11 rule. I use it throughout the week. Last week, it hit about 5 or 6 times, set me up for nice trades, and I was able to take advantage of that. So what you look for is you look for where's the low at on the S&P, and then you add 7 points to it. Where's the low at for the NASDAQ? You add 11 points to that, and you want at least an hour in time to go by. It's a good rule to keep you on the right side of the market, the 7-11 rule. Write it down. If you got questions at the end, I'll give you my email and I'll respond. Okay. Now, let's go to Friday. Anybody watching the market this Friday? This is the 7-11 rule. This is the 7-11 rule in reverse. On Friday, I was watching the market. It's been very bullish. If I subtract 7 points from 1858, where would I start thinking about being short on the S&P? Right there. Okay, 1851. On the NASDAQ, it went to 30, I think it's 3602. I think the number was about 3590, right there. Once this market turned south for me, that's when I came up with the Google put trade that I did during that time frame. Simple to use, simple to practice. You just got to know where to look for this kind of information. Pretty cool. All right. Oh, I wish I could talk more, but I guess I got to get to the invitation. Join me Sunday night. I'm going to do a planning session. I have a formula of success. I'm going to show you. We'll give you a special invitation to come. It won't cost you a dime to come, but I'm going to come Sunday night at 8 o'clock. That's 9 o'clock Eastern time, and I'm going to lay out the week, okay, in specifics. I do that every Sunday night. In my room, I do private trading. I do live market analysis. We have a whole community of traders. And that weekly planning session on Sunday night is what you're going to be invited to, okay? And we call the formula of success on Sunday night with the plan, Monday with the numbers. We huddle every day from 8 to 8:30. And then on Tuesday, I live trade. So we do this as we go through the week to show people how it works. This Sunday, I'm going to release 5 stocks that I mentioned that I will be holding for 60 days. These 5 stocks, I'm targeting about a 35% return on these stocks. I've got them picked out. I'm ready to go, and Sunday night, if you come, I'll give them to you. You can register at this link if you want to come. Adam will send you an email. Adam, are you also going to fill out the survey? I tell you what, if you would like the 2-hour tape on the 7-11 rule, Adam will publish the survey in here, and after you register, we'll send it to you, the 2-hour tape on getting into the nitty-gritty of the 7-11 rule. Adam's got a link with the survey he'll post in there. Do you have it in there? Okay. All right. Let me answer some questions. Go back and answer some questions that people asked. What is the 7-11 rule? 7-11 rule is a way to determine whether you ought to be long or short. And I've worked out a simple approach for you to be able to understand the market at any time during the week, whether to be long or short. I use 7 points off the S&P and 11 points off the NASDAQ. And when they're in sync, okay, either 7 points off the low or 11 points off the low, I'm looking for a long situation, okay? And I can take you through it when I show you my own software, but anyway. Let me go to another question that somebody asked. Okay, which company has the best platform program to trade stocks for day traders who go in and out very quickly, sometimes seconds? Thanks for your time. I don't trade that way. Fausto might give you a better one. I use a company called Thinkorswim for a lot of my stuff. For my futures, I use 3T futures for my futures trading. But for options, Thinkorswim is pretty good. It's just a good company. Okay. Let me go back to more questions you had. Yeah, there's a link to register. Let me see if there's no. Do I ever use options in my trading? About a third of all my trading is option trades, Richard. I love options. I've been trading options my whole career. If you get a chance to read my books, you'll hear some of the nightmares of bad options. but after all these years, I've got a method that works that I teach, and it's pretty simple. About $2,500 is what the minimum that you'll need. You know, remember, you're only risking $300 a trade. Now, if you got $2,500, you can't do what somebody's got $25,000 can do, but you can still grow that account. And I've proven that time and time again using this $300 overcoming fear of stop. Okay, so even small traders can work with me because of the way we approach the market. Now, you know, so basically it comes down to a number of contracts, a number of risks you want to take on. As big as you want to be or as small as you want to be. That's what the beauty of the $300 message is. The 7-Eleven time frame, that's a great question, David. I use it over a 30-minute time period, 30 minutes. And the history behind that is because all the data that's been compiled since 1927 has been on a 30-minute basis. If you go to the exchange floor, they have checkout every 30 minutes. Everybody's on that 30-minute clock, so I track a 30-minute chart to keep up with the 7-Eleven rule. Okay, I answered what time frame. Is the stop on E-mini 7-Eleven the same 6 points or $300? The 7-Eleven rule, typically you don't have to risk that much because there's usually a basing before the takeoff, and I'll show you what you should look for. Typically I will use maybe 3 or 4 points on a trade like that. On the NASDAQ, I might use 5 points, which is $100. The link's not working, Donald. Adam, help Donald do that. No, but I do trade currencies. I trade the euro. I trade the Japanese yen. Sometimes I'll do a British pound, but generally speaking, I'll stay focused on the euro. Sometimes I'll do the Canadian dollar or the Australian dollar. Adam, did you check the link out? Did it work? Did anybody else have trouble with the link? Netflix from here. Great question. I think Netflix after Monday might be in a buy area, and I'll look at it and give you an answer if you come Sunday night if you ask me a question when I pull it up. But my gut tells me once we hit this this market on Tuesday, a lot of stocks are going to be going up. How do I train myself to do short stocks? Well, let me tell you how. It's pretty easy. Think of the following. You got to buy, you got to sell, right? Think of it in these terms. You got to buy and you got to sell. And your goal is if your sell is greater than your buy. So if you're going to short something, you're just reversing the transaction. You're selling first and buying second. So you still want your sell bigger than your buy. That's how I get around the fear of being short a stock. I just think about it in those terms. People talk about doing put credit spreads. why don't we do, let me see what they're saying here. Why don't we do debit call spreads? What's the trade-off? Well, it depends on the time you're going to hold it. That Netflix trade I played short, I did actually a debit spread to the put side. I bought the 420 and sold the 410 because I didn't know if it was going to happen in 1 or 2 days. It actually happened in 4 days, and I'm glad I had it. But I like that if I like put spreads and debit spreads if I'm going to hold it for more than 48 hours. It's 9 o'clock, Denny, on the East Coast. Adam just did something here. I answered the minimum trading account. Chart on, yeah, sure. I'll go back to the one on. Let me see if I can do that real quick. Okay, there it is. You take the high, and I'll tell you, it's not as reliable from the downside as it is to the upside, but it's pretty reliable, especially for the NASDAQ. And you take the high, which was 1859, subtract 7 points is 52. The NASDAQ triggered first because it broke 11 points. It was 35.90, and the NASDAQ triggered first. And you see what happened after that. That was Friday afternoon. Adam, they're having a little trouble with the link. Do I sell covered call options? I have. At certain cases, let's say if I had a stock price I was trying to protect, like I'm long PAAS, it's a silver stock from 10.5. I sold the 15 calls against it, but they're about ready to expire because I think gold's going to be going higher too. Yeah, to open any account, I think you need at least about $2,000. I think Thinkorswim said they'd take a couple of hundred, but I think you need at least that. Okay, Michael's asking, what's the target after you get long? Well, that's a complicated question. Do you have a short-term trade on, or do you have one like I had on from the last 7-Eleven buy I took? I kept for like 48 hours, but I did it with options. I tend to limit my futures trading to day trading. Yeah, no problem, Jimmy. Make sure, did the link work? I'm just curious about the link. Did the link work? Amber, we don't open accounts on the future side. 3T Futures does, and Adam will get you in touch with the right person to do that. There's a survey that worked. Okay. Using the $300 rule, how many shares of Hershey will I be purchasing or will I be buying calls? I will probably have a total on Hershey, personally, probably about 15 is what I'll have. All right, Jeffrey, the link did work. Elroy, it worked fine? Okay, good. Worked for you? Good. One, send an email to Adam. He'll make sure you get taken care of. Adam, why don't you post your email in there and you take care of people who had trouble with the link. Oh, you got to use the link in the chat room? Okay. There you go. I never know if you can use it in the chat room or you had to copy and paste it. It's always confusing. Marco asked, why wait $1 or an hour for the 7-Eleven rule? What you're going to find out, Marco, what this is, this goes into, to the market makers, everything else, but this goes into the fact that once you get an accumulation of stability in a market, the shorts will start covering, and about 7 points on the S&P, 11 points on the NASDAQ. It measures perfectly, so you want to give it at least an hour to make sure you've got a good group of people that are looking at charts that might be fixing to get killed. I do futures on Paul. I do futures on the currency trading. That's it. Okay, IBD has turned market in correction. Do I give them any credence? Yeah, absolutely. They're a good magazine. They got good stuff. But we're talking about stuff that's in my backyard right now. I'm giving you the timing. I'm giving you the price. I'm telling you where to buy it. This is how I've lasted 33 years. And so that's why this opportunity on Tuesday is a big opportunity for me and you and anybody else that wants to listen. Because if the market sets up and set up perfect as far as I'm concerned, all we got to do is get the actual numbers on Tuesday to give us a green light, and I'm going to be going green. They are, but you'll see retracement rallies in biotechs during this rally if you're stuck. I haven't traded Twitter yet. I've been watching it. I probably will trade it. There's not many stocks I haven't traded, but I will trade. I just haven't traded it yet. Okay, Jeffrey asks is a very perceptive. You both have to trigger. Yes, if you're new, wait for both. If you learn what I'm going to teach you, you can take the NASDAQ a lot of times ahead. Yeah, both from a simple version, both have to trigger. Again, I want to thank Fausto for having me here on Saturday afternoon. This has been fun. I hope you learned something. Let me summarize what you should have learned. There's a lot of ways to skin the cat. The biggest problem that you're going to have as a trader is controlling those emotions. I believe my $300 risk profile works for everybody. And whether you're using small contracts or large contracts, you can set the speed you want to fly. But the good news about it is that you'll be able to make money if you learn the art of entry and exit. If you have any problem getting the confirmation, send Adam an email. He'll take care of it. I haven't traded many biotech stocks. I've been making my money over in stocks like Apple, Google, these option plays, Apple, Google, Netflix, Tesla, Amazon, those type stocks, Hershey. Yeah, here's one of my students in here. He said we had a great trade on the euro Wednesday night. I forgot all about that trade. Absolutely, it was a good one. That's a great question, David. No, use the 7-Eleven to tell you when to go into options or stocks. It works for everything. Peter, my system is a combination of tape reading. If you ever read anything about Jesse Livermore, you ought to read his books. My system takes the tape into consideration. The 7-Eleven rule is not that I don't use technicals. I don't use historicals. I use seasonals. I use key numbers. I use news. I use anything that gives me an edge, and I pull it all into the tape of the market. Simple and straightforward. Amazon, that's a great question. Amazon, I listened to these option guys, and they're saying Amazon looks pretty weak. I don't know if I agree with that or not. If you come Sunday night, I'll look at it and give you my current view. Okay? I always post numbers on Monday on Amazon. What do we talk about? Negative thoughts, JF? What a trader, though, huh? We didn't talk about his personal life. Eight o'clock Central Time on Sunday night will give you the formula of success for the week. I'll give you the plan. I want to thank Fausto again. I'm out of time. And it's sure a pleasure being with you today. Y'all have a great weekend. If you play golf, hit them straight. Thanks, Fausto.
Thanks a lot, Tom, for that great presentation. And once again, Tom, if everybody knows, I didn't get a chance to do a quick intro. But if everyone doesn't know this, Tom's a very, very personal good friend of mine. Been doing, I've learned a lot from him. I mean, I see him at the expos all the time. He invites me down to Alabama to come and speak to his anniversary classes all the time. And then in the meantime, like I said, I always learn something new just sitting here just listening to him. So anyway, to kind of learn more about Tom's promotion, feel free to visit his website, give him a call, or register at that link.